Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Well with me, Lovisha Darad. Well, it has been a range-bound week. Nifty is flat so far this week, and today I wouldn't say the story would change much to either. We have the GIFT Nifty, which is pointing out to a lower start for our own markets, and global handover is quite negative too. We saw last night US markets have closed lower. There was weak forecast from the retail giant Walmart. And of course, today morning, Asian markets have also opened on a lower note. We saw Japan's 2-year high inflation data has pressured the Asian markets and that has caused a ripple effect. And of course, Wall Street's handover also did not promise a good start for the Asian markets too. But we'll watch out how the yen moves because these high inflation figures also boost the possibility of a rate hikes on the front. So we will watch out how the currency movements also shape out. But all in all, a weak handover. The only plus which is emerging from the markets is the reversal of the broader indices. But we'll watch out if it's just a technical rebound or can we sustain those higher levels from the mid-cap and small caps front. For all this and more, we will be having our guests joining as usual. So keep posting your stock-related queries on our live feed and we will be taking them up shortly. But for now, let's quickly take a look at the top headlines this hour. Stock sell-off on Wall Street following muted guidance from Walmart. The S&P 500 retreats from record levels. Nasdaq is top loser with the cuts about 1%. Asian markets trade lower as Wall Street closes on a weak note and uncertainty lingers over US President Donald Trump's tariff strategy. Meanwhile, the GIFT Nifty is indicating a lower start for the Indian markets. Gold prices hit a record high as safe haven buying sustains over uncertainty of President Trump's tariff threats. Crude prices rise for the third straight day with Brent above $76 per barrel. After a prolonged battle with investors and ousting of Chairman Rashmi Saluja, the Burmans acquire control of financial services firm Religare. The Burmans are the new promoters following the completion of open offer, which has resulted them in holding 25% stake in Religare Enterprise. Walmart-backed PhonePe is gearing up to go public in India but stops short of announcing timeline, while valued at $12 billion as per the last fundraising round in January 2023. Now, as we were talking about, so far this week, markets have been completely uneventful. It's been completely uninspiring. Nifty is confined to about that 300 points range and has strongly defended that 22,800 mark. But today we'll watch out whether or not it still continues to defend that 22,800 because we've had a fairly negative global handover to start off with. But while we've been hoping for the Nifty to reclaim those 23,000, bulls haven't been convinced enough to take the markets up there. We have the FIs on the sell button and then we have the tariffs jitters, which is playing a spoil sport for our own markets too. But in the last 12 sessions, Nifty has ended in red. Out of 12, they have ended in 11 sessions. What is plus, however, in the markets is broader indices, mid-cap and small caps up about for the second straight day, and it is set for the best week since December last year. On the other hand, Bank Nifty index, that is up about 0.5% so far this week, and it is set to gain third out of the last 4 weeks too. But let's take a look at how today's trade setup looks like. If we have the Nifty put call ratio, which has risen to about 0.9 from 0.8 levels in the previous session, some kinds of optimism which is attempting to take space in the markets at this point of time. But let's see whether this optimism sustains throughout and whether the markets actually have the confidence to take the leg up move too. But second on your screen is the F&O ban list. No new stocks have been added, but the stock that has been retained continues to be Manappuram Finance, and on the other hand, no stocks have been removed. The third is your fund flows data. That is, your FIIs have sold about stocks which is worth about 3,000 crore rupees in the cash markets. So they continue to remain on the sell side. And of course, DIIs has tried to offset the loss which is caused by the FIIs and have bought stocks which is worth about 3,900 crore rupees in the cash markets. Now let's take a look at how the pre-open rates stand at this point of time. Sensex is down about 50 points, flat in the red at this point, and of course Nifty is also 0.3% cut which is coming in during the pre-open rates. But let's quickly get on board with our technical expert of the show. We have with us Osho Krishan of Angel One. Osho, good morning. Range-bound trade continues as we were talking for the third straight day. When can we expect a breakout? How does the next week look like?
Very good morning, Lovisha. Firstly, thank you for having me at the show. Well, yes, as you have mentioned that in the last 3 to 4 trading sessions, the market has been very lackluster. There has been a range-bound movement of nearly 300, 320 odd points for the benchmark index. And nothing has changed as of now also because the data remains the same. The long-short ratio, the relentless selling from the FIIs stays at the same zone. So I'm expecting that there can be some uncertainty or some more movement in the lackluster development that can be seen, but the only positive development that we are witnessing in the market that any dip towards the zone of 22,800 is being bought by the bulls. So for example, for today also we are the gift nifty is hinting for a gap down. So I'm expecting that any dip towards the zone of 22,800, 850 could be bought into by the bulls for intraday traders. But on a broader term time frame, the figure remains the same. There has been no positive development. Nifty is on a falling wedge around the zone of the lower band of the falling wedge. So I'm expecting that positionally it is situated at a very strong support zone. Bulls and bears, they don't have conviction as of now in the market, and we need some kind of positive triggers to see some kind of momentum coming back in the market. For the technical levels, 23,000 still is a very strong, formidable obstacle for Nifty, and until we breach that level on a sustainable basis, there can be some continuation in the lackluster movement from the zone of 22,800 towards 23,000 in the short term period.
Okay, all right. Osho, what about the Bank Nifty index? Because so far this week it has fairly outperformed the headline index, 0.5% gain coming in. But yesterday it was one of the laggards in the trade. But how does the near term look like for the Bank Nifty index?
See, overall, this counter has outperformed, and majority of the financials and public sector banks have decently started moving upwards. Even the public sector bank have seen very strong movement in the last trading session, but it does not have any strong weightage in the banking space. So that is why we have not seen very positive development in the Bank Nifty index. But overall, comparatively, Bank Nifty is situated at much better place than Nifty. It is having a very strong cushion of 48,800 and 48,700 kind of a zone, while on the higher end, until it breaches the zone of 50,000, till that time we can see some kind of range bound movement ranging from 48,800 towards 50,000 with a view of buy on the dips and light in positions once it moves near the zone of 50,000.
Okay, okay. Osho, what about the Nifty IT index? Because the IT index, it has been declining for the second straight day. We saw some, negative outlook from the Cape Gemini front also. What does the near term look like for the IT index? Because everyone has been quite bullish on the IT index, but for 2 straight days, we have seen declines.
See, overall, in this kind of a market, IT is the only counter which was having some kind of a stability at the higher levels. But yes, in the last 2 to 3 trading sessions, there has been some kind of correction, and both heavyweights and mid cap counters both have seen some kind of deep corrections or decent corrections, I would say. But still, looking at the technical front, Nifty IT is now placed around the 200 simple moving average, which is near to the zone of 40,600 kind of a zone, 200 from current levels. So I'm expecting that if it breaches below the zone of 40,500, then only we can see some kind of, or there could be some kind of caution that can be seen in the IT space. Else, there can be some kind of stability or consolidation around the zone of 41,000, 41,500 in the coming period. So as of now, from the technical front, there is no cautious approach in IT space, but yes, one should stay vigilant with the developments of every day. If there will be any continuity on the sell-off side, then we can see some kind of a selling pressure coming in the recent period.
Okay, okay. Osho, what has been doing well for the markets is definitely the broader indices. So, can we expect mid cap and small cap indices to extend the recovery, or can we just say that this is just a technical rebound that is taking place given the sharp fall we have seen?
See, as of now, it's been only 2 days that we have seen some
Oh,
outperformance from the mid and small cap space. So it will be very early to state that from here onwards we can see a reversal kind of a zone. But no doubt there is a strong pullback in these counters. Majority of the counters from these spaces have seen a decent recovery. And if we see the advanced decline ratio, then from the last 2 to 3 trading session, there has been strong buying as compared to the sell-off. So I'm expecting that these should continue, or even if it stabilizes at the current level, then we can see a positive movement in the coming future because overall the technical parameters have already been into a oversold terrain. So if there will be any kind of positive development or stability, So that could be seen as a positive development for these counters. So I'm expecting that these should be seen as a pullback, and one should not be very much complacent with the kind of a move that we are witnessing in the small and mid cap counters. If there will be a sustainable move, then definitely one can start taking aggressive bet. As of now, we have a cautious bullish approach on the mid and small cap spaces.
Okay, a cautious approach on mid and small cap. Usha, what about the metal counters? Because last week we saw Trump's tariff jitters, playing a spoil sport on the metal index. But this week, it has extended its gain for the fourth straight day. What are you seeing for the Nifty Metal Index?
See, overall, for metal counters, there has been a strong pullback or a strong recovery in majority of the counters from the heavyweight and even the mid cap counters also. But overall, if I have to say about the index, then index is hovering at the zone of 50-day exponential moving average, which historically have seen as a kind of a resistance for this counter. So until it breaches the zone of the previous swing high, which is approximately 50 to 100 points from here onwards, that is 8600, 85, 80 kind of a zone. So until it breaches that levels, one should now at after such a pullback, one should be cautious, or if someone is already holding position, I would advise to trail their profits, keeping a stop losses. Because if there will be any kind of profit booking or some kind of sell off also can be seen in these counters, then we can see some all the counters coming back to the majority of the support zone. But as of now, we are at a very crucial zone of make or break. If there will be any 50 to 100 points of decisive movement in the index, then we can see a strong movement in the coming period.
Okay, okay. Osho, we did talk about metal, then banks, and even IT. But any other sectors that you're watching out for a good sustenance in this volatile market?
Yes, counters like which are related to the equity markets like BSE, CDSL,
Hmm.
CAMS, these counters have started gaining a strong traction, and I'm expecting BSE has already been into a very positive terrain, so I'm not expecting that there can be a decent correction or it will be having a healthy correction in the recent period. But counters like CAMS and CDSL, they have seen a very steep correction in the near period, and with the kind of development that we are witnessing in the last two trading sessions, there is a possibility for a higher revival and a reversal kind of a scene in these two counters. So one should stay focused to CDSL and CAMPS. These two counters are looking very positive to me. Technically, they are turning from the oversold terrain, so I am expecting that there can be a decent movement in terms of return in the near period.
Okay, CAMS and CDSL that you're eyeing out for. But if you have to phrase in one line, what should investors' trading strategy should be at this time? Which should they focus on sell on rise strategy, or how should they go about it?
See, one should remain cautious. I'm having a bullish approach, but a cautious bullish approach. The dips are being bought into, so that's a very positive trigger. And after a correction of nearly 13% from the highs, I'm not expecting that this should further aggravate until we see a very uncertainty or any uncertainty rise in terms of global and domestic market. So I'm expecting that here onwards, the market should fizzle out the sell-off pressure, and one should look for accumulating good stocks in staggered manner.
Okay, all right. A cautious approach should be warranted. But let's see how the markets have opened. Well, we have opened in the red. Nifty is above that 22,850 mark, but of course below that 22,900. We are 1/10 or 2/10 of a percent cut coming in for the Nifty 50 index at this point of time. Sensex is also down about 100 points, 75,596 levels that we have opened to for the Sensex. And of course, for the mid cap and small cap indices, mid caps have opened in the green, flat in the green, and small caps have also opened with about 2/10 of a percent gain at this point of time. So there is some resilience which is once again visible in the broader end of the markets too. India WIX has taken a bit of a jump right now, 2% uptick, but of course below that 15 odd levels, and it is at 14.9 at this point of time. If you look at some of the sectors, Nifty IT index once again not doing well, flat in the red at this point of time. Nifty oil and gas, seeing about 2/10 of a percent cut. Nifty private banks have also taken a bit of a lagging, taking a bit of a knock at this point. Nifty auto index after yesterday's rebound, we are seeing again the stock is succumbing to the index is succumbing to selling pressure. 0.5% cut coming in for the Nifty auto index. Nifty FMCG at this point, the rates are getting updated, but let's see. Nifty Pharma Index also, flat at this point of time. So slowly and slowly the markets would be taking a stock of how it will be shaping up. But let's take a look at the top Nifty gainers at this point of time. Cipla with about 1% gain, Tata Steel with 0.5% gain coming in. Some of the metal counters are dominating the Nifty 50 list. Tata Steel, Hindalco with about 0.5% gains. Then we can see some financial services like Bajaj Finserv with about 0.3% gain, Shriram Finance with about 0.3%, L&T also extending its gain from yesterday, 0.2% for L&T too. On the other hand, if you look at the top losers, we can see the private lender ICICI Bank is seeing a cut of about 0.5%. Dr. Reddy's Lab extending its losing streak, 0.6%. Pharma stocks has taken once again a knock. The pharma index is also very flat at this point of time. ONGC with about 0.5% cut. Kotak Mahindra Bank, some management changes that came out yesterday with about, and the stock has reacted today, 0.5% cut coming in for Kotak Mahindra Bank to Britannia Tech Mahindra, once again with experiencing about 0.3% cut. But let's take some stocks in focus. We have your NTPC Green. The company did sign a MOU with Bharat Light and Power to accelerate its green energy objectives, and they plan to establish infrastructure for green hydrogen too. Osho, if you look at the stock price, the stock is still trading well below its listing price. Can we expect the stock to reclaim those levels in a month or two?
See, overall, this counter on the technical front have a very limited data, so I won't be having a very clear view in this counter. But looking at the development that we are witnessing in last couple of trading days, it is having a kind of a sloping trend line breakout. So I'm expecting that if it surges beyond the zone of 115 or 118 kind of a levels, then there can be a potential of a strong momentum coming back in this counter. As of now, it will be very early to say anything, but I feel like that there is a kind of a sloping trend line breakout in this counter, and one can expect a decent movement in the coming period. But having said that, one who is already holding a position from a trading perspective, do keep a structured stop loss of 100 kind of a zone.
Okay, 100 kind of a zone at this point. But let's move on to another stock in focus, which is your Tata Steel. The company did acquire 191 crore equity shares of T Steel Holdings for about $300 million. The stock is reacting well, 1.5% gain coming in at this point of time. And following this acquisition, T Steel will remain a wholly owned subsidiary of Tata Steel. Now, this acquisition is a part of the company's strategy to strengthen its global presence and expand its portfolio in the steel sector too. Osho, the stock has been trying to move up, and today the stock is reacting well. So, do you expect gains to continue in the near term too?
Again, Tata Steel, all the steel counters have started gaining some kind of a positive momentum in the recent period. Tata Steel still is on the same note, but I am expecting that now it is at a very crucial juncture of having a resistance near the zone of 145. So that should be watched very keenly. If it breaches the zone of 145 on a decisive manner, then we can see a further continuation in this counter. Else, there can be some kind of consolidation at a higher levels. I'm not having a view that it will see a further correction or a profit booking strongly, but there is a possibility of consolidation around the zone of 135 towards 145. So this is a very crucial juncture at which it is currently hovering around. Once it sees a breakthrough above 145, then it will be having very bullish approach for another 10 to 15 points of movement on the higher side.
Okay, all right. Let's talk about Religer Enterprises because the stock has been reacting well. It is 5% up at this point of time. This came on the back of news of the Burman family acquiring a control of the company, and they plan to work with the leadership team to reinforce strategic direction too and long-term value creation. Osho, the stock after the December peak, the stock has crashed severely, about 23%. Today it's showing signs of reversal. What do you expect the near-term charts to hold?
Overall, the technical perspective looks kind of challenging for this counter. It is having a very strong resistance around the zone of 245, followed by 255. So these two are very crucial resistance level for this counter until it moves beyond the zone of 255, which coincides with the 200 day simple moving average. Until that time, one should remain cautious in this counter. Why? Because on the weekly time frame chart, it has given a breakdown from the zone of nearly 245, 250 kind of a zone. So I'm expecting until it breaches the same levels on the higher end, one should remain sideways. Once it moves beyond the zone of 200-day simple moving average, then one can try to look for buying opportunity in discount.
Okay, all right. Cautiousness can emerge for Religare Enterprises. But let's take some viewer queries that is coming on our live feed. With the first query coming in from Satya, he's asking, he's holding Birla Soft at 600 levels since a few months. And what is the view for the next 1 year? Should he average or should he exit at this point of time? What should he do? Birla Soft, if we look at the counter, he's holding at 600, trading at about now, it's at like 475. 6 months also, the stock has been quite negative, Osho. Q3 results is also not promising. What do you expect?
Overall, this counter has seen a kind of a 50% retracement from the momentum, from the where it has started gaining momentum from the zone of 250 towards the peak of 710, 715 kind of a zone. So I'm expecting on the technical front, there has been a kind of a breach, or there has been a kind of breakdown in this counter from the zone of 500, 520 kind of a zone. But overall, at current levels, the technical parameters have been into very deep oversold terrain. So it is not advisable to hold exit the holding position if one can hold it for a medium term perspective. In the short term, yes, there is no positive views coming, or the positive outlook is being seen in this counter, but from a medium term perspective, one can stay invested in this counter. I am expecting that the time it breaches the zone of 530, there can be a positive momentum coming back in this counter for immediate target of nearly 630, 620 kind of a zone, which is the 200-day simple moving average. And a bullish approach can be put only once it moves beyond the 200-day simple moving average. Till that time, it is not advisable to either average the counter or accumulate freshly at current levels. One should stay put with their investment if the time horizon is from medium to long term perspective.
Okay, stay put from medium to long term perspective. But let's move on to another viewer query. That is your Debu case asking the view on Ajanta Pharma, Osho. How does the stock look like on the charts? If we look at 6 months perspective, 13% downtick, even 1 month also, the stock doesn't look that promising. Q3 results were like quite okayish on that front.
This counter, as you mentioned, that has been into a corrective phase from the zone of nearly 3,400, now hovering around the zone of 2,600 odd levels. And looking at the technical front, it is having a support near to the zone of 2,300. So there is a possibility of further correction in this counter. So one should stay sidelined from this counter. But currently, it is hovering near the cluster of moving average. So either wait for further dip towards the zone of 2,400 and 2,300 to accumulate this counter, or wait for a sloping trend line breakout in this counter, which will be above the zone of 2850. If it breaches that level, then the mojo will be back in this counter for a higher momentum or a higher target of nearly 3,300. But at current levels, it is totally avoid.
Totally avoid for Ajanta Pharma. But on that note, let's take another viewer query. That is your Pooja Khanna. She's holding Zentech from 1900 levels. What is the long-term view on the stock? What is she asking? Osho, if we look at Zentech, of course, we've seen a very sharp fall, 20% lower circuit recently it had hit. Today the stock is doing well, 1.5% cut, could be a rebound too. But Q3 numbers also was very disappointing for markets. What do you expect in the near-term holds?
See, in this calendar year, within 2 months kind of a scenario, this counter have corrected nearly 55%, 60% from the peak. So I'm expecting that there could be something related to the fundamental of the company, else it would not have seen such kind of a correction. But no doubt, last year there has been a significant move also, so one should not negate that. Looking at the technical perspective, the counter is having a support around the zone of 1,000, which it recently have tested. And from here onwards, there is a possibility of a kind of a breather or a pullback that can be seen in this counter. So stay put with your investments. I am not expecting a very aggressive target, but in the short term period, there is a possibility of pullback towards the zone of 1,350 to 1,400. Once it reaches the zone of 1,400, then we again need to review that whether it will continue its momentum or if it will again slip down towards the zone of 1,000.
Okay, all right. So some cautiousness could be observed on the counter too. But let's move on to another view query. That is your Satya is asking the medium-term view on AB Capital. How does the stock look like on the chart, Osho? Very mixed third quarter performance.
From a medium term perspective, this counter has been into a very strong correction zone recently, but from a medium term point of view, there is a kind of a support near the zone of 150, which it recently have retested. So I'm expecting that there can be a pullback that can be seen in this counter for the immediate target of nearly 170. Not very much bullish as of now, but if it breaches the zone of 170 on a decisive manner or on a sustainable manner, then we can see some kind of bullishness coming back to this counter for a higher target of nearly 190 to 195 from a shorter term view. If there will be further movement, then one can definitely trail their stop losses to higher zone and can hold for medium term point of view also.
Okay, all right. Let's look at another stock viewer query. That is your Gitu Sandesh is asking the view on Vartech Vabag. Vartech Vabag, if you look at the stock, Osho, after after the December peak, the stock has corrected fairly about like 20%. But third quarter results was a little okay. Only the operating profit did take a hit, but however, revenue and profit did hold well. What does the near term look like for Vartech Vabag?
See, this counter again have not seen that steep correction or that kind of a profit booking which we have seen in the kind of a movement in the last trading year. So there is a possibility of further consolidation or correction in this counter. So one should trail their stop losses towards the zone of 1300 or 1280 kind of a zone. If one needs to hold it for a shorter term period, there is a possibility of a strong traction coming back only once it breaches the zone of 1560 on a higher level. So till that time, there is a cautious bullishness approach that can be seen, but it is always better to keep a stop loss for such counters because we have not seen a very decisive correction in this counter as of now. It has just corrected nearly 12% from the highs or in this year. So one can expect a further round of correction or profit booking in the coming period. So 1300, 1280 will be the support zone, while 1560 is a very strong resilience. The time it breaches the zone of 1560, then only we can see decisive upside movement coming back to this counter.
Okay, 1560 that we need to watch out for Bartek Wabag. But let's move on to another viewer query. That is your Shweta Naidu is asking the view on CG Power for 6 months, and she's asking what the stop loss and resistance should be because she's bought the stock at 619 levels. She's seeing a bit of a loss, Osho, at this point of time because the stock is trading about 594, so 4% loss near coming in. The stock did try to make a comeback in December, but again the stock fizzled out. What are your thoughts on the stock?
Overall, this counter has seen a decent correction from the highs, have corrected approximately 50% of the movement that we have seen in this counter. So overall, currently it is hovering at a decent zone. I am not having a very bullish approach in this counter as of now, but the downside is seems to be limited in this counter. So I'm expecting that one can stay invested. Currently, it is hovering below the short-term moving average. So that's a very challenging scenario for this counter. If it breaches above the zone of 620, then only we can see some kind of positive momentum coming back. But currently, in the last 2 months or 1.5 months, the counter has been struggling to move beyond the 20-day exponential moving average. So once it breaches the 20-day exponential moving average, then only we can see some kind of positive momentum. Until that time, there is a possibility of lower highs, lower lows in this counter. So it is advisable to keep a stop loss of the recent lows near approximately 535 for an immediate target of 620. One should stay put if it breaches the zone of 620, and then we can see a decent movement towards the zone of 680 to 700 from short to medium term point of view.
Okay, all right. Let's move on to another viewer query. That is your Mithilesh is asking the view on LNT. LNT, how does the stock look like on the charts, Osho? Because recently it did hit quite a bit of a low. But for the near term, how does the stock look like?
The LNT has been into discussions many a times because this counter is actually placed at the same level where it was a year back. So in February also we have seen 3200 to be seen as a very strong support. Currently it is approximately hovering around the same levels. So in the recent year also, in the last year also, 3200 have been tested multiple times, but from there onwards we have seen a decent movement in this counter. So I'm expecting that from a short to medium term point of view, that means from 4 to 5 months point of view, one can definitely stay intact with their investment in LNT. I'm expecting that on the higher end, looking at the historical trends, the 3750 to 3800 can be the levels that one can eye for. And on the lower end, it is at a very strong support zone, so should not be a worry at these levels.
Osho, just one last question before we let you go. You did talk about capital market themes, but any other top bets that you would like to list upon during this volatile period?
Yes, there are two counters which are actually in my list. One is CDSL, which has already seen a decent movement in today's session, but it is still having a strong potential to have a decent movement of approximately 1350 to 1360 kind of a target. So one can look for this counter. The other one is IndusInd Bank. IndusInd Bank is has seen some kind of positive movement in the last few trading session, has retracted approximately 38% of the recent movement and hovering above short-term moving average. So I'm expecting that in the coming period, it has a potential to test the zone of 1120, while on the lower end, 1020, 1015 is a very strong support zone for this counter. So this counter can also be seen to accumulated or even for short-term traders to buy at current levels for a target of nearly 1120.
Okay, all right. Thank you so much, Osho. Thank you so much for your time, and we hope that we connect with you soon.
Thank you so much.
Thank you. All right, let's take a quick check of the markets before we move on to our next guest of the show. We have Sensex, which is flat at this point of time, and of course, Nifty is also flat, but it has recovered and it is back to about 22,900 levels. We were seeing that it did slip below those levels during the open and during the early minutes of the open. But what is doing well on the markets is definitely the small cap index. Nifty small cap seeing about 1.5% gain. So third straight session, we are seeing a recovery of the broader indices. Mid caps also doing well with seeing about 0.7% gain, which is nearly a percent at this point. India VIX is slightly cooled off. It is down about 0.5% cut. 14.5 levels it is trading at. Nifty IT index continues to remain bogged down. Nifty auto index also remains in the negative territory, and of course the banking index is also in the red at this point. If you look at the pharma index, however, it is seeing a bit of a rebound at this point. 0.1% gain coming in for the Nifty pharma index. Nifty metal index continues to do well, seeing a gain of about 1%. At this point of time, but let's get on board with our market expert. We have Ambareesh Baliga joining us. Baliga sir, good morning. So good to have you.
Good morning.
Sir, what do you make sense of the markets right now? Because plenty of consolidation going on. Any
But
catalysts that you're hoping for the markets to drive ahead?
no, see, in the short term, we could see some sort of a bounce back. I mean, although I look at the markets fundamentally, but technically, there is a very good support at about 20,800 levels and 900 levels. And because of which, a number of times you've seen that the market dumps there, consolidates. And this time, possibly, it can bounce back decently well from here. But that's again short term. If you're talking of the longer term, in the sense, I would say medium term, not really long term, I would say medium term. I think the market direction is clearly, I mean, downwards. I mean, we have corrected decently well from the highs which we had seen in September, October, and the same process will continue. I mean, I see the markets closer to about 20,000 or slightly lower than that. And again, this is because of the sort of earnings which we have seen recently, and the macro numbers which have been coming haven't been really encouraging. And after a long time, I think we have seen a loss of confidence from the retail investors. I mean, they were the ones who were supporting, I mean, like investing directly as well as investing via mutual funds. But there seems to be some amount of panic, loss of confidence out there because in the past 3 4 years, every time the market has come down, they've seen that if they buy, the market I mean, bounces back, and they made money every time. This is the first time they are witnessing this sort of losses. I suppose number of portfolios are down about 30 40%, if not more, depending on how much of small cap and mid caps they have. And this has actually led to certain amount of panic as far as the retail is concerned. So I think this sort of a downside will continue, and you really don't expect a major move after that. Possibly we could see a bull run resuming in 2026, but I see the whole of 2025 to be a bit painful as far as the investors are concerned.
Okay, okay. Because even the broader indices that have made comeback from the past 2 days, the earlier guest I was talking to, he said that maybe there is some kind of cautiousness. We cannot term it as a meaningful recovery that we are seeing for the markets. But what do you make sense of the broader indices? We've seen a decent amount of correction too.
No, I mean that's what I said. I mean, because of the sort of correction which you've seen, it's quite natural that you will have a bounce back. I mean, it's never really a one-way street. I mean, every time you come to a certain level, there's a bounce back, and then you go to the next lower level. I mean, this is what happens when the markets are in a downward sort of a momentum. So this time we could see the indices, bouncing back to levels of about 23,300, 23,400. But we should not mistake that as a fresh rally. That's only a bounce back. And possibly those who have bought at lower levels, I mean, they have that opportunity to book some profits. And those who could not book out earlier, I mean, they also have a chance to at least cut the losses or at least get into liquidity to a certain amount. Because, like I said, if we see the indices at about 22,000 levels over the next few weeks, you will have individual stocks falling possibly either 10, 15, 20% more.
Okay. But yes, what about the FIs? Because everyone is talking about that April could be the month when we can see some of the flows which is coming back to emerging markets, and of course India could also benefit during that point of time. But what is your view on this FI flow front?
No, see, if we see the markets at lower levels by April, I suppose at those levels, markets become decently valued. And the other important issue as far as FIs are concerned is that our rupee needs to stabilize, whether it stabilizes at 86, 87, or whether at 88, 89. But there has to be some amount of stability. I mean, we have seen rupee very stable in the last 2 years. It's only in the last couple of months that we have seen the rupee depreciating quite quickly. So the most important thing is the rupee has to stabilize. And once it stabilizes, I suppose that is the time you will see some amount of inflows from the FIs. But as of now, I think it's clearly a rush to the exit gate. And people would, like the FIs who are exiting, are trying to get the best exchange rate possible.
Okay, okay. But Baliga sir, would you say that we have reached to the bottom of a correction, because right now it's a very cold market, it's a very quiet market. Can we see some reversal that is coming on, at least from the next financial year onwards?
No, see, frankly, it's very difficult to say where the bottom would be. I mean, although
Okay.
I'm saying as of now that possibly levels of 22,000 should be reached, but you can't be 100% sure because you're not God, end of the day. I mean, only once the bottom is made and the markets move up about 8, 10% from those levels, then you can look back and say, okay, yes, I mean, that was the bottom. But as of now, it's very difficult to call where the bottom can be. But surely, like I said, at those 22,000 levels, I would find the markets decently attractive. I'll possibly be more aggressive in my buying. That does not mean that I'm not buying now, because about 6 to 12 months back, I was all the time saying that the markets are expensive. It's time to get into cash. And we had got into cash to an extent of about 40%. Today, we are sitting on a cash of about 25%. In the fall, which we have seen in the past couple of weeks, we have been investing slowly. But then it was a slow investment. At about 22,000 to 20,500 levels, out of this 25%, I will be quite aggressive and invest 15% of my cash. In that range of 22,000 to 20,500. Again, I'll be keeping that 10% cash as a contingency because I also don't know whether the markets will stay at 22,000 levels or whether there'll be panic at that point of time and you can see a further slide. So I'm keeping that 10% for that eventuality. In case it fall below that and we see the markets consistently coming back, possibly 23,000, 20,500, I think at those levels I'll invest the balance 10% because I know that at least there is some amount of certainty that the markets have bottomed out and it's moving up. So I think it's more important to have a view, and I would say it's more important to have a strategy.
Okay, okay. Then if you have to recommend, if you, like at all, where would you spot value in this recent correction? You said that 10% you'll keep as a cash
Yes.
because you don't know what the uncertainty is going to be for the markets. But anything valuable that you're finding right now after this decent correction that we saw?
See, I mean, I would look at consumption because that's
Okay.
what had slowed down in the last couple of quarters. We see that the government focus would be on consumption going ahead to kickstart the economy. Clearly, I mean, infra surely is there, but consumption could be the new story playing out. So that's one space where I would be investing in. Specialty chemicals is the other one, where I see the China plus one playing out, despite the sort of threat, of tariffs as far as US is concerned. And the third, but not the last, is clearly infra, because in the last 12 months, we have seen the execution getting slowed down because of elections in a couple of states and as far as the general elections are concerned. But this year, I think the execution should really take off.
Okay, okay. But you guys, what about pharma and auto pack? Because we're seeing a lot of news flows that is coming on that front, that Trump is
I
planning a tariffs of about 25% and so from starting from April onwards. But how to play out the auto pack? Because on one hand we have Trump's tariffs, on the other hand we have Tesla eyeing an entry. What is
Absolutely.
expected for the auto sector?
So I think because of this, there could be some amount of pressure over the
Mm,
next couple of weeks on this sector, and that could be a buying opportunity. Yeah. I mean, I wouldn't say buy right now. Possibly wait for the next couple of weeks, because there'll be some clarity on Tesla. There'll be some clarity on the sort of import duties on I mean such vehicles. We need to see as to what sort of an effect it would have on the auto space overall. I mean, as of now, I don't see, I mean, given the information we have as of now, I don't see Tesla's entry really bothering the listed auto space, because most of their offerings would be at a price level which is higher
mm,
than the current offerings which possibly Tata Motors has, or even Mahindra and Mahindra has. I'm not talking of the new range of Mahindras, which will be between 21 lakhs to 31, 32 lakhs, but their existing range. So unless we have all those details, it'll be difficult to, I mean, give a call on auto space. But as of now, I would say wait and watch. I think we could see some more correction, at least sentimentally, because of all this news coming in.
okay, okay. So you can say that it could be a buying opportunity during this correction for the auto theme.
It could be. It could be.
Okay.
I mean, like talking of specific stocks, Tata Motors, I've been saying for a while that I think we should wait for levels of closer to about 600 or slightly below that.
Hmm. Okay, okay. But yes, we did talk about consumption theme, and of course, after the budget boost, it has taken everyone. It has become a favorite of everybody. But what
Right.
about the capex themes? Railways, defense, and power. It was once everyone's top pick, but right now it is completely gone out of favor. Defense is still, defense is still a lot of people are bullish on it. But what about railways and power?
I would still be a bit cautious,
Mm-hmm.
including defense as well as railways, because these have had become multi baggers. I mean, say about 3 4 years back, I mean, like this was the most ignored pack, and then it was discovered because of the government focus on that. Huge amount of order flows happened, and that got discounted naturally, because I mean, we have never seen this sort of flows for this sector. So quite a few of them have become 15 to 20 baggers. They had become. And from there, we have seen a correction of about 30 40%. But at the same time, look at the profitability. Profitability has gone up about 3 to 4 times in most of the cases. So does a 15 20x on the market cap, does it justify? I don't think so. And because of which I have been saying at that point of time that possibly defense could be a good space to exit, book your profits. Because what the market had done was it had discounted the order flows. And most of them had orders filled up for the next 6 8 10 years. But then no one was talking of execution, the sort of execution risk which can be. And one of the prime examples is Hindustan Aeronautics, where you've had the air chief coming on the media and really giving caustic comments as far as HAL is concerned, saying that he doesn't have any confidence in the execution. And this could be the case across the defense space. So that has to be discounted. I'm not saying, I mean, longer term, clearly one needs to be bullish on this space, but you need to wait for the right price to buy these stocks. And I believe the right price could still be, I mean, at least about 15 20% lower, if not more.
Okay, 15-20% lower that you're saying. But one last question before we let you go, Vijay sir, how should we navigate this stock picking strategy going ahead? Should we believe that value would take precedence or growth should take precedence?
I think you should look at both, because see, India is a growing economy, and there's no question about that. I mean, we could have a slower growth like what we are having now, because the expectations are much higher. The growth has slowed down, but this would be one of the very few economies which will continue to grow, not for the next few years, the next few decades, and we could really be having those golden decades over the next, possibly at least the next 2 decades. So you can't go wrong on India. I think the only strategy you should have is to buy more or less like at the right price. I won't say the right time, at the right price. And that right pricing should be happening, anytime soon. Because the last 2 years, it was very difficult for a fundamental picker to really look for value because, most of the stocks had gone up. But now I think that time is coming, which is a value picker's time, a contrarian buyer's time. So utilize this time and refurbish your portfolio.
Okay, all right, refurbish your portfolios. But all right, with that, we have to let you go, Baliga sir. Thank you so much for your time, and we hope that we connect with you soon.
Yeah. Thank you.
Thank you. All right, let's take a quick check of the markets. Well, the sell-off has intensified. Sensex is down about 200 points and Nifty is also down about, with seeing a cut of about 0.3% below that 22,850 levels. So yes, we were down 22,900, but now we have breached past that 22,850 levels too. Definitely what is contributing to the loss is your bank Nifty index, 0.2% cut coming in. Nifty auto index also seeing a cut of about 1%. Nifty media index 0.4% cut. FMCG index also not doing well, 0.2% cut. And of course pharma index is also in the red, 0.8% cut coming in from the pharma index. Bank Nifty index, especially the private lenders, is also not doing well, because we can see the likes of HDFC Bank, ICICI Bank seeing a cut of about nearly 1% at this point of time. But on the other hand, mid caps that stood out well in the open and the early trade, that has also slipped in the red. Flat in the red at this point of time. However, small caps has also trimmed majority of its gains. 0.5% gain at this point of time. We did see 1.5% gain in early trade. Right now it is at half a percent at this point of time. But with that, we've come to an end of this edition of the opening bell. Don't forget to tune in at 3:20 for closing bell, because we have a market voice that will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.